In today's Climate Watch, climate change is having a big impact on the real estate market in one major coastal city. According to a new article on CBS Money Watch, a Harvard professor has found that homes at higher elevations in Miami are gaining value faster than those multi-billion-dollar homes down on the beach. He calls it climate gentrification.
And he joins us now from Boston to discuss all this. He's Harvard Graduate School of Design professor Jesse Keenan. Thanks so much for the time, Professor. I know you say that there are a number of factors that contribute to this disparity in Miami climate, just possibly one of them. But for a lot of folks, this phrase climate gentrification is new, so explain it to us.
Sure. Climate gentrification is a proposition where there's some instability in land markets by virtue generally increased rents. And it can happen one of three ways. It can happen by virtue of people moving from a high vulnerability to a low vulnerability area. That may be from rising sea levels, increased forest fires, whatever that stimulus may be. There's another prospect of which climate gentrification may manifest, and that's when you have investment in resilience and adaptation that actually operates indirectly to increase value. So an area that was otherwise at risk increases in value because of the lower risk associated with the resilience or adaptation investment. And there's a third pathway, if you will, and this is where the increase in property taxes, the increase in productivity, travel, mobility, just the general cost of living increases in areas of such high exposure that really only the wealthy can afford to live there. And while we don't think in Miami that there is a particular immediate impact from climate gentrification, we are starting to see some early signs associated with that pattern.
Professor, if you just look at this year alone, all of the hurricanes that ravaged parts of the South, the wildfires in California, do you see things changing more quickly in terms of home prices, number one, and what are the areas that you think will be most affected in the near future?
Sure. It's too early to tell specific to home prices. Our work, which will be coming out in a matter of months and weeks, is going back and based on a price index going back as far as 1971. So it's really too soon to tell as to immediate home prices. But there's no doubt that certain places in Houston, Monroe County, Florida, certainly in Puerto Rico, where there's a significant shortage of housing, multifamily rental housing, that is having an impact on both the for sale and rental markets in the short term, and that's something that's a trend we would think would continue as these communities recover. With the multi-billion-dollar impacts that we've had across the country relative to uninsured losses, the impacts on property tax rolls, on local government's ability to recover is really quite significant, and that is another factor that we would anticipate would increase the cost of housing indirectly through property tax rolls as well.
You've also suggested this could have some type of tipping point effect where there are a wave of foreclosures because of this. Explain why that would happen, how that would happen.
Well, it's really hard to know exactly if there would be a tipping point, but theoretically there is an idea like the foreclosure crisis where once one property starts to see a decrease in value, it starts to trickle over to the associated property. So during the foreclosure crisis, a particular piece of property may have been foreclosed, and that had a negative impact on the valuation of their neighbors, even though their neighbors were not in default of their mortgage. We would think that perhaps in the future climate gentrification may operate in very similar terms, where a certain neighborhood, which let's say is subject to nuisance flooding, which we think is a potential driver of market valuation at this point, may have impact on their neighbors, whether they like it or not.
How important is it whether these houses continue to be insured? Is that a major factor in this?
Certainly the insurance and the NFIP reform, which is really pending now, is really absolutely critical. We had the Bigger Waters Act a number of years ago, which tried to bring up rates up to actuarial rates. That is a market rate and not necessarily all overly subsidized by the government, one could argue. And that had a tremendous impact on coastal communities across the United States. In some cases, people were paying $400 or $500 a year, were then paying $6,000 or $7,000 a year for insurance. So as the federal government, let's say, tightens the fiscal belt of the NFIP, and that's the National Flood Insurance Program, we would anticipate that more actuarial rate-based charges in the insurance market would have a significant hindrance on certain market dynamics within coastal real estate communities.
Such important research. Thank you so much, Harvard professor Jesse Keenan, and love that bow tie.
Thanks for having me.